أعوذ بالله السميع العليم من الشيطان الرجيم من همزه ونفخه ونفسه بسم الله الرحمن الرحيم. Dear listener, we are going to discuss about riba, which is the major difference between conventional banking and finance and Islamic banking and finance. So in today's session, we will discuss in detail about riba, its type and its prohibition. So in this series of sessions, we will have three sessions, and each session would be having its own characteristics. So first of all, we will discuss about what is riba or interest, and in the second session, we will discuss about the types of riba, and then we will discuss about is riba is limited to a loan contract only, or it can be happen in the sales contract, and then we will discuss about the practical examples and practical implications one by one. So first of all, we need to know that what is the basics of riba, or what is the literal meaning of riba. Riba mean excess or addition or increase. So the basic meaning of riba is addition or increase. So now we need to know the different types of uh, riba or interest. So we can categorize it into two different types of riba. One is riba in the loan contract, which is very much common in the banking and finance industry, whereas the second one is riba in the sale or exchange contract. So here we need to understand and we need to know that the riba is not only prohibited in the Islam, rather it is prohibited in all the major religions of the world, and more specifically we can say that it is clearly prohibited in all the Abrahamic religions. Abrahamic religions include Judaism, Christianity, and Islam. But unfortunately, some of the experts of their religions said that it is, you can say, permissible in some specific circumstances. Let's say, for example, Jews say that if a Jew want to transact with the Jew, so they cannot deal in the riba. Whereas if Jew will deal with any other religion inhabitant like Islam, Muslims, like Christians, like Hindus, so they can charge riba. And on the other way around, in Islam, there is very limited, you can say, favor or support of this concept that if you need money or loan for, you can say, the commercial purpose, so you can deal in riba. But if you don't want to take loan for the commercial purposes, rather you want to take the loan for the personal purposes, so you cannot charge or you cannot pay the riba. Anyhow, there is a very clear, you can say, prohibition of interest in all the major religion of the world. So here there are, as we have discussed, that there are two different types of riba. Uh, the first one is riba in the loan contract, and we call it as riba al-nisaya or riba al-Quran. Why we call it as riba al-Quran? Because its prohibition is discussed in detail in the Quran. We call it as riba al-jahiliya. Then, and by the way, this is the riba which is excessively or dominantly used by the financial industry, banks or insurance companies or microfinancial institutions or capital markets, money markets, etc., etc. And then there is another type of riba that is in the sales or the exchange contract. We call it as riba al-fadl, and we call it as riba al-hadith as well. Why? Because the prohibition of this kind of interest is, or riba is, discussed in the sunnah or the hadith of Prophet Muhammad, peace be upon him. We also call it as riba al-buyu. So why the riba is prohibited in the different religions of the world? First of all, the first reason is that there is an unequal risk sharing, that is one-sided benefit. Let's say, for example, if one borrower is getting the money from the lender, so only borrower is sharing the risk. Lender is not having any kind of risk. Why? Because he has to get fixed or maybe variable returns, but the returns are insured. So, but on the other way around, if the borrower is not making money or not making profit, So he or she has to pay the interest principal plus the interest amount, which is basically an example of unequal risk sharing. So there is no risk sharing in riba based financial transaction, whereas in Islamic banking and finance or in Sharia finance, there is a risk sharing element over there. Then the second one is exploitation of people in need. Let's say, for example, I am a poor person, and I am in need of need to have a medical, you can say, expenses, but I am not having the money. So what I have to do, I have to get the loan. I have to seek the loan from someone, and if he or she is agreed to pay me the loan along with the riba, so that is again the exploitation of the people in need. Let's say, for example, I am in need to get a medical treatment, but I'm not having the money. So what I am doing, I am seeking the money from the lender who is borrowing, who is basically providing the money to the borrower, mean to say me, on interest. So that is the exploitation of the people in need. So it leads to the wealth concentration as well. For example, if I am having the money and I am lending it to a needy person, so in an interest-based system, money flows from borrower, usually the poor or middle class, to the lender, normally the banks or the financial institution or the wealthy people. So borrower become poorer due to the interest burden which they are seeking basically, and lender becomes richer without any kind of effort. He's having the money or she's having the money, she's or he's just lending the money, and they're not putting any effort, but they're getting the money. So basically this is the concentration of the wealth. So this basically widen the wealth gap and destabilize society. Then money on money is unproductive. Let's say, for example, in what is happening basically in the Islamic finance industry, in the one side there is a money, but on the other side there is a product. So there is an economic activity by which the people are getting the employments, and they're earning the money, and then they're spending the money on some industries, and those industries are basically again flourishing or growing, stay at growing stage. So that is not that is money on money basically not create. There is no conformity that there would be a, you can say, economic activity. There may be an economic activity and there may not be an economic activity. But in Islamic finance, the economic activity is ensured. Otherwise, you cannot make money on money. So, very recent example of the financial crisis is there in front of us, that the interest-based financial institutions collapse, and in USA, and they impact in globally basically. So what they were doing, they were making money with the money, which is not any productive activity, by the way. Then debt trap and the endless cycle. Yes, if let's say, for example, you are missing your due payments on the loan, principal plus you can say interest. So what there would be happening, there would be a compounding of interest, and you would be under the burden of endless, you can say, principal plus interest amount. Then it removes the compassion from the financial dealings. What does it mean basically? Religions, specifically Islam, encourage the, you can say, benevolence, and Islam and the religions always, uh, you can say, lesson that you should help the needy people. Then Islam basically encourage the fairness and the mutually beneficial transactions, whereas riba based, you can say, financial transaction replaces these values with guaranteed profit. Lender is getting the guaranteed profit from the borrower. On the other way around, there is a pressure. Let's say, for example, if the borrower having some losses, so borrower would be having some pressure on it, on him or her, and then hard heartedness as well, and then the exploitation, as we have discussed in the previous slides as well. Then create instability in the economy. If let's say, for example, there would be an imbalance between the lender and the borrower. Why? Because the lender is getting the guaranteed profit or guaranteed return, whereas borrower is not getting the guaranteed profit or the returns. Rather, he or she is bearing all the risks pertaining to that particular financial activity. If there would be a loss, so they would be under more pressure. So that will basically create imbalance or instability in the economy. And on the other way around, the financial instruments basically creating instability in the economy, as we have seen in the very recent financial crisis. We cannot say that very recent, but those are recent. Those are the latest one in 2008 and 9.